And it's the last trading day of the week and the first trading day of December. Good morning, good evening, wherever the world you're watching from. It's Business Morning, coming to you live from Channels HQ right here in Lagos. Great to have you share your morning with us. Let's get the top stories now that sets your agenda. We see Nigeria Securities and Forex Exchange, FMDQ, says its secondary market turnover grew to 21.7 trillion naira in October. In its latest monthly market report, the exchange says this new level of turnover represents a 6.75%, about 1.57 trillion naira month-on-month decrease, and 60.27%, or about 8 trillion naira year-on-year increase from the turnover recorded in September this year and October 2022. At the same time, the total turnover for the spot and derivatives market was 20.48 trillion naira and 1.22 trillion naira, while the spot FX market turnover decreased by 14.96% month-on-month to $4.66 billion against the $5.48 billion turnover recorded in September this year. And the Organization of Petroleum Exporting Countries and its allies has set Nigeria's oil output targets for next year lower than the country's expectation. In a statement released at the end of its meeting yesterday, the coalition of oil producers put the country's 2024 crude production target at 1.5 million barrels per day and tasked the three consultancy firms, IHS, Rystad Energy, and Wood Mackenzie, to verify the production figures with its African peers, Angola and Congo. The move comes as OPEC Plus agreed to voluntary oil output cuts approaching 2 million barrels per day for early next year, led by Saudi Arabia, rolling over its current voluntary cut. Meanwhile, Brazil has announced its plan to join the influential OPEC Plus oil coalition, but has not clarified if it would have to carry out any production cuts starting next year as a result of its membership. Let's get a check on the oil market now. See, oil prices fell in early Asian trade today, extending losses after OPEC Plus producers agreed to the voluntary oil output cuts for the first quarter next year. They fell short of market expectations. See, Brent crude futures for February fell 14 cents, about 0.2%, to $80.72 a barrel. US WTI crude futures fell 12 cents, about 0.2%, to $75.84 a barrel. Saudi Arabia and Russia and other members pumped more than 40% of the world's oil, agreed to voluntary cuts, about 2.2 million barrels. We'll keep tracking to see how investors react to all of these output cuts and see where the price ends for this year. And the Nigeria incentive-based risk-sharing system for agricultural lending, NIRSAL, is making a case for the increment of all bank loans to agri-businesses to at least 10%. Managing Director of NIRSAL, Mr. Abbas Masnawa, was speaking during an inspection tour of one of the farms the company guarantees in River State. The farm, Globetrot Farm, sponsors Nigeria Limited, produces more than 100,000 birds annually with plans to diversify to other livestock farming. Take a listen.
This poultry farm in Obiakpu village in Oyigbo local government area of River State is the reason for this visit by officials of the Nigeria Incentive-Based Risk-Sharing System for Agricultural Lending, NIRSAL. NIRSAL is here on inspection of the farm facility in company of its partner, Polaris Bank.
These are breeders. And we hatch the eggs.
The farm owned by Globetrot Farm Sponsors Nigeria Limited is reputed as producing 28,000 eggs daily and over 100,000 birds annually. NIRSAL says this partnership is going stronger since considering its benefit of agribusiness and ultimately food security.
We covered more than 200 billion in Naira on Kobo into agri-space by ensuring that we work with the bank, we partner with the banks to support the different sectors of agriculture. Before the coming of NIRSAL in 2013, almost just about 2% only, which is very, very insignificant, of bank lending is to agri sector. And we cannot continue to rely on oil. We have to diversify our economy. As it is today, 10 years after, more than 6% of bank lending is agriculture. And we can all do better.
Polaris Bank commits to this alliance.
The aim of this is that the bank is expanding its frontiers in supporting agro-allied businesses, and Globetrot being a key player in this sector, in this part of the region and the country as well, was a great opportunity for the bank to step in and support the agro-allied business. You're going to see Polaris investing more in the agricultural sector as well.
The farm owners say the initiative has seen them grow their investment.
The relationship with NESA has been quite productive, and even in terms of speed of delivery, I would say quite impeccable. Immediately they stepped into the relationship, the transaction moved quite fast, and in a record-breaking level, we're able to get to financial close.
With a credit base of $500 million, NERSAL says it has so far guaranteed over 200 billion naira in agricultural lending to farmers across the country, and is pushing for 10% of all bank loans to go to agribusinesses latest by 2025.
And as the federal government sets out spending and revenue for 2024, the budget deficit sits about 9 trillion. FDI inflows have waned. The Nigerian EY, one of the largest professional services networks, earlier in November launched its Africa attractiveness report showing FDI inflows across Africa. Well, joining us now to analyze this is Damilola Aloba, partner and consumer industry sector leader, EY West Africa. Join us right here in the studio. Good morning.
Good morning, Ladi.
Great to have you. So, yeah, we've set our plans, spending plans, the federal government for next year, and we've seen that massive deficit there, 9 trillion. And definitely we've been talking about FDI, inflows into Nigeria. We've seen the president travel to different countries, showing investors that, come into Nigeria, bring your money in here, you'll be able to take your money out, you'll be able to make profit, leaving. But break down your report, at this time, how Nigeria fared and most African countries.
Okay, thank you very much. I think the first thing to say is that FDI inflow in 2022 increased by 64%. I think there's a recovery from past years. If you know, in recent years, FDIs in Africa has faced significant challenges due to global shocks. And one of that is the COVID-19 pandemic. And of course, that has dampened investor confidence over that period. So what we have now is a case where there's that recovery from those sectors that have faced vulnerabilities, like tourism, hospitality, even manufacturing. And thus, apart from the fact that there's a rise of, there's an increased inflow of about 64%, there's also about 194 billion in total that came into Africa in 2022. Now, looking at that, significant, the leading FDI destination in Africa in 2022 happens to be Egypt, Northern Africa. And followed by Northern Africa, you have Southern Africa, led by South Africa. In fact, South Africa led Sub-Saharan Africa. And the third is Morocco. So Egypt attracted $107 billion. South Africa attracted $27 billion. And Morocco did $21 billion in inflow. And also, of course, these inflows are captured by projects based on our report. So the fourth in that line is Kenya. Kenya attracted just $2 billion in dollars, and Nigeria also attracted $2 billion. Of course, in terms of projects, Kenya attracted more projects than Nigeria. Now, the other prominent thing to note is that in Africa, the clean tech space seems to attracted the most investment, the largest investment, FDI inflow.
Clean tech,
renewables.
Clean tech, yeah.
So the renewable space, Africa is gradually gravitating towards the green revolution, moving away from fossil fuels. And of course, to that extent, a lot of investment is coming. South Africa also has energy crisis and all of that. A lot of capital came into that sector, the largest being again in Egypt, followed by South Africa, Morocco, and Kenya. So clean tech followed by the business technology sector and also the business services sector. The mobility sector also came second for the first time, in 2022. But the prominent ones in order of sequence or rank is the clean tech, technology, mobility and business services. Now, one important thing to also state is that the West, the Western European countries, seems to be the one investing aggressively in Africa. So you have the likes of UK, France, Germany, Switzerland playing a prominent role amongst the top 10, and also Northern America, which is US, North America, which is US. And China and India remains within the top 10 bracket. India just moved to the top 10. But what is important to state here is the prominence of UAE that invested $50 billion in 2022 alone in Africa. So that's the largest investor in 2022. And I'm
sure they moved from what level? What level were they before?
So the very immaterial level, below 10 billion. In fact, US that has been investing in Africa made the largest investment in 2022 of $7 billion. So between 2018 and 2022, US invested approximately $7 billion, being the highest. So you can imagine. So I think this happens to be the major findings. All other countries also attracted investment,
right?
But I think those are the prominent
ones. Well, talking about prominence now, we see Egypt attracted the largest chunk.
Absolutely.
In 2022. Talk to me about why the investors are finding Egypt so attractive, or found them so attractive in 2022.
I think investment goes to areas that they find comfortable. Egypt, I think, is investor friendly based on our findings. And then they pay a lot of attention to promoting investments, what you call investment promotions. And countries, we also found out from the research that countries that encourage or promote economic diversification attracted a lot of investments. You can see that apart from clean tech, Egypt is also prominent in the tech space, in the automotive space, and same as Morocco. And of course in the business services space. So for this reason, as well as the availability of requisite infrastructure, these are things that have endeared Egypt to a lot of foreign
making
investors.
them look so good, to put your money in.
Let me not forget to also say that Africa too is also doing a lot of cross-border investments. About 12% of African countries also invested in Africa. So 12% of total FDIs came from African cross-border deals.
Cross-border design. And what kind of countries are we seeing here, and where are they investing?
South Africa, Nigeria. They mostly invested in tech, financial services, and also tech. And business services.
That's taking your investment, say, from Egypt now, and you're taking it to, say, Nigeria.
Yes, absolutely.
So we're seeing Nigeria also in that.
Nigeria, a few investments came about $500 million based on our research.
Quite interesting. All right, at this time, everybody's looking for money at this time. And talk to me about 2023 numbers. It's coming to an end now. What did the report say about 2023?
Well, the report is giving a lot of prominence to some of the future for Africa in terms of attractiveness. So we've seen that by moving away from fossil fuels in the extractive space, a lot of the African countries are now focusing on the critical minerals, and also on earth metals that support electric vehicle manufacturing, and also lithium battery manufacturing and all of that. So we see a gradual gravitation to that line, and there's a lot of funding coming from outside Africa into that space. I think what's also critical is for African governments to accelerate their economic reforms, because that's very important in ensuring that they are attractive enough for investors to come in. You can see that a lot of African countries are facing currency crisis, debt crisis, and all of that. And of course the focus on digitalization, for African countries, and development of critical infrastructure. There's need to provide internet, at least for over 300 million people. We are moving towards the AFCA, which is going to happen very soon. And I dare say that this is the best time for African countries to focus on, managing their public national finances and debt, proper debt management, so that there's no credit default that will make, them attractive to.
And talking about, attractiveness now, for 2024, the government is planning 27 trillion naira expenditure going into 2024. We're seeing the budget deficit there about 9 trillion. They're forecasting that they'll make at least 18 trillion. Talk to me about how FDI plays into all these plans, and if we're going to see an improvement of FDI inflows into 2024.
Well, I think so far this government has made some, for Nigeria, this government has made some bold decisions, starting from the subsidy removal and to the FX, and also appointment of...
some say it's subsidy reduction.
So they say. But I think from where we are right now, 6 months, a lot of key decisions have been made. And I think that with the focus on those economic reforms, looking at even from the oil and gas industry, refineries are going to start operating and all of that. I believe increasing government revenue is the first level, ensuring that oil production, which we've always relied on, continues to increase to record levels that can enhance our books, and also ensuring that Nigeria is free of insecurity, and encouraging businesses. So I'll say that the tech, a couple of sectors would needs to be focused on. For example, agriculture, technology, and even industrialization, ensuring that there's electricity to even support all these things we're talking about. So I would say focus. Government needs to pay attention. We should shy away from just managing our finances and our debts. We should have targets of saying, look, we also want to achieve certain growth, high growth, GDP growth levels beyond where we are. But I dare say that there needs to be a lot of seriousness on our part as a nation.
From what you've seen in 2022, 2023, give me a forecast for 2024 for FDI inflows.
Well,
if we continue at this pace.
FDIs, I would say that the first thing is to ensure that there's FX liquidity. What are those things that we can export as a country that can attract FDIs? We have comparative advantage in certain commodities. We need to focus on that. I would say industrialization again. We need to focus on our special economic zones and our free trade zones. How can we maximize them in order to be able to produce competitively? And also we have huge human resources. How are we applying them? That's why I'm excited about what's happening within the tech space, where young people are being made productive. So what are we doing with our human resources? We need to make sure that we don't make them redundant, or we encourage skills development to encourage production, and the more we ourselves can export, we have everything we need to export. We need to make sure that these special economic zones become a lot more active. We have free trade zones not doing enough, and so that way we gradually move away from relying on foreign products here and there, to start relying on wearing locals.
So I can buy Nigerian-made ties. Even though I already wear Nigerian-made suits at this time.
Food produced in Nigeria,
right?
And all of that.
Yeah, so much to unpack there, and definitely we're all looking forward to 2024. Hopefully, we have some kind of soft landing.
Absolutely, I hope so too.
2024. Thank you so much for coming on, Damilola Aloba, partner and consumer industry sector leader, EY West Africa.
Thank you for having me today.
Thank you. All right, so enhancing youth entrepreneurial development and investment opportunities is one of the ways to improve Nigeria's economy. That was the focus of the African Entrepreneurs and Investors Roundtable held in Lagos. Speaking to Channels Television at the event in Lagos, stakeholders called for the implementation of favorable policies that will enable such businesses to thrive better. Take a listen.
It is a call to the policymakers, especially the government representatives, that we should create an enabling environment for businesses. We should, harp on policies that would encourage businesses to thrive, especially to provide, support for young entrepreneurs and even established entrepreneurs. This is a major call for policymakers to create that enabling environment for businesses to thrive. Because as we all know, Africa, as I always say, is we have a resilient spirit. We are entrepreneurs naturally.
To talk to young people, most importantly, about building the culture of entrepreneurship, and which is something that is a very key focus from all stakeholders within the African continent today, to reshape the continent, to have young men and women who can conform to the entrepreneurial culture and also build businesses and compete with other businesses everywhere else in the world.
Welcome back. Well, the President Bola Tinubu-led administration is planning to spend 6.75 trillion naira of its projected 27.5 trillion budget on defense and security, education, and infrastructure in 2024. The administration is also eyeing 10.42 trillion from tax, dividends, and others. Joining us now is Nyobong Usen, Head Research and Policy Advisory at Budget. Good to have you on the show. Good morning.
Yeah, good morning, Ladi, and thanks for having me.
Right, so we'll be focusing on the what to expect for spending, going into 2024. I'd like to get your take at Budget, on this proposed appropriation bill for 2024. How are you guys seeing it?
So if you look at the macro fundamentals, you're looking at the exchange rate, which has been placed at 750, although it's still some levels away from what the current rate is at 850, at about 853, but it still looks a little bit realistic. But for inflation, we think it's ambitious. You currently have inflation, as at the last count in October, at about 27.3%, and food inflation at 31.8%. And if you look at the legacy issues driving inflation, we do not think that those can be adequately addressed to reduce inflation to 21.4% in the 2024 fiscal year. If you also look at oil productions, we have our projections also at 1.78 million barrels per day. As at October, we're producing 1.35 million barrels per day. For the second quarter of 2023, 1.2 million barrels per day. Also, those legacy issues around oil theft, alien oil assets, infrastructure, as the case may be, declining investments, those issues have not been addressed. And we do not think that, over the course of the next 12 months, those issues would be addressed for us to ramp up production to 1.78 million barrels per day. Then if you come to the fiscals, for revenue, we also think that the revenue is overly ambitious, especially if you situate it within the current performance. Which brings me to an issue that I think that government needs to address headlong, and that has to do with the reporting of our fiscal accounts. If you look at what the Accountant General reports on the Open Treasury portal, it's way below what you would often see with the budget implementation reports or the MTF, as the case may be, and now with the presentation of the 2024 budget. So as at August 2023, by the account of the Accountant General of the Federation, we had our revenue at about 3.9 trillion. And with the presentation of the budget, it was announced that as at September 2023, we had revenues at 8.6 trillion. So that would mean that in 30 days, we were able to raise 4.6 trillion naira. I don't think that's possible. So there needs to be some harmonization around the reporting of fiscal accounts so that we know exactly where we are as it regards whether revenue, expenditure, or what we spend in servicing our debt. On the expenditure front, of course, we like the fact that more priority has been placed on capital expenditure. And we feel that in the course of implementation, that with regards to disbursement, that government puts its money where its heart is, with with regards to how it allocates resources in that regard. For debt servicing, of course, if you look at historical trends, government has often exceeded its projections for debt service. And so we feel that if government is not able to meet up with that 18 trillion naira revenue target, that's would widen the deficit and the need for borrowing. If you now come to the deficit financing, we need some clarity also on what government intends to do with the $8.6 billion dollars and 100 million euros borrowing plan that it had announced. Because if you juxtapose that with the plan for foreign borrowing for the 2024 budget year, it puts it at 1.7 trillion. But by our calculations, that $8.6 billion dollars and the 100 million euros takes the foreign borrowing plan to 6.5 trillion. So we need to know exactly that borrowing plan. Is it meant to fund this year's budget? Is it supposed to fund the medium-term expenditure plan, which we think wouldn't be the right way to go, because you can't be planning to borrow now for appropriations that are not in effect yet. So we need some clarity around what that deficit financing for government would look like. Also, for the domestic borrowing, now that it has outlawed the ways and means, and it has planned to borrow 6 trillion domestically, we have concerns around government crowding out the private sector with that volume of borrowing domestically. But overall, we would like to see what the breakdown of the budget is, so that we know exactly what government plans to prioritize going into the 2024 fiscal year.
I guess we already have some idea of what's going into education, health, defense. We're seeing defense is still taking a big chunk of that proposed expenditure. But looking at spending at least 6 times more on servicing debts next year, in your opinion, what do you think is the way to navigate this for some kind of soft landing?
Yes, so I do not know if that is correct, if we are going to spend 6 times more from previous levels. But with regards to financing the deficit, of course, it's only the revenue. If you're able to grow your revenues to levels where you would need to you need less deficit financing to support the budget, that's the only way you can reduce that burden with regards to borrowing. So we need to ramp up activities around revenue mobilization. If you look at the oil sector, for instance, that sector has experienced negative growth over the last couple of years. We are hoping that with the removal of subsidy and and government addressing oil theft, that is able to contribute significantly to government revenues for 2024. But if you come to solid minerals revenue, which is where I'm a little bit concerned, in fact, over the course of the next 3 years, in the medium term, government is projecting not to earn more, up to 6 billion naira from the minerals and mining sector. And so I do not know why government is, under projecting in that sector. We know that that's one sector that, over time has not been able to, provide maximum benefits in terms of what it contributes to the revenue pool. And with government trying to, reposition itself with regards to, policies around in that sector, we would have thought that the projections coming from that sector vis-a-vis what intends to spend through the budget should yield more revenue. And so that's one sector that we were hoping. I mean, Nigeria is blessed, in commercial quantity, with solid minerals across the length and breadth of the Federation. But aside oil, we've not been able to, translate that into wealth for the country, and also have that as one of the diversified bases of revenue for government. We hope that would change.
Now, looking at, OPEC Plus at this time, planning to cap our production about 1.5 million barrels per day next year, definitely that's going to have a huge impact, if we're going to follow with the cuts, going forward. But do you think this budget will be successful without the government cutting cost of governance going into 2024?
Definitely, it's not going to be successful. That's why I had said in another program that the clarion call by the president to the National Assembly should not only be, on the speedy passage of the budget, but on a responsible passage of the budget. We want to see a departure from, those times where the National Assembly members, in trying to review the budget, put absurd insertions that would overbloat the budget and, and crowd out, allocations to very critical sectors of the economy that is meant to, reduce poverty, stimulate growth, and ensure better living standards for Nigerians. So we're expecting that, with regards to how the National Assembly allocate resources, that they are prioritized in areas, that improve our human capital development indices, that, would stimulate growth and would drive, capital inflows into the country. We want to see them depart from those items that should ordinarily be addressed by the local government and the state government, and generally see better value for money. And so for us to be able to maximize the gains from this budget, we need to cut waste. We need to do away with expenditure inefficiency that has bedeviled the budget of previous years, as the case may be.
All right, so what do you think needs to be done to actually hit that target and somehow hopefully surpass the 18 trillion revenue target?
I mean, oil revenues is one. The reforms around the oil sector needs to go on. We need to treat, our oil sector as, and oil assets as national security assets. And so issues around theft need to be addressed headlong so that those revenues can come in. Some of the gains around CIT, VAT, we're hoping that, those gains will continue to be sustained. For customs revenues, of course, the corruption around the ports, those are areas that we think government would need to address. For minerals and mining revenue, I alluded to that earlier. That's one area too that we think government would need to increase, its revenue. You need to address the issues around security, in the Northwest with regards to areas where gold is being produced, so that all of the revenues coming from that can find its way into government coffers. And if you come to the operating surpluses, of the GOEs, it's important that government is able to be more disciplined with the GOEs. That's one area that we felt that over the years, government has not, really come through with regards to how it's managed the GOEs. As it is for the previous years, the GOEs budgets, have not been taken together with the budget of the other MDs. It would look like the GOEs that have been set up to generate revenues for government, are operating in a world of their own. So we're expecting that this budget that was presented before the National Assembly included the breakdowns of the GOEs, and so that we're able to track exactly what those GOEs are generating and spending. Because if you look at the budget implementation reports, it often excludes the revenues and the expenditure of those GOEs. And so we expect that if the GOEs are supposed to contribute a significant proportion of your revenues to the pool, that there's a lot more transparency around what's happening with their revenue and their expenditure.
Right, so much to unpack there. Thank you so much for coming on. Nyobram Usen, Head Research and Policy Advisory at Budget. It was great having your perspective.
Yeah, thanks for having me, and have a lovely day.
You too. All right, so there you have it. At the end of the day, the government needs to make more revenue when it comes to that 2024, spending plan. We're happy the government has said they're not going to increase taxes, going into 2024. Instead, they're even looking at cutting all of the other excess taxes out there and try to, improve the baskets, going forward. Hope they're able to, work with that. Also, looking at the budget at this time, the budget to GDP ratio, we see the LCCI saying that it's the smallest in Africa, at this time compared to peers. So I guess at the end of the day, with 200 million people, we should be looking at increasing our spending. Well, to take the conversation forward now, as the federal government is planning spending and revenue for 2024, I guess you and I also need to plan for 2024, our spending and how we're going to make money as an individual. Well, joining us for this conversation now is Ola Oladile, founder the Money Wit Club. Great to have you on the show. Good morning.
Good morning. Thank you for having me.
So we see the government is planning to spend 27 trillion for 2024. Before we get into personal finance, how are you seeing public finance at this time? How does government plans to how does this plan of spending 27 trillion with a revenue target of 18 trillion? If Nigeria was a business or an individual, what would you be saying about the health, the financial health of that person or business?
So first of all, Nigeria is not a business for an individual, so you almost have to think about it slightly differently.
Right.
The fact is that government spending is good. The fact that the government is spending is actually good because it flows into the economy. So from that angle, yes, it's good that we are spending. Now, when it comes to also having a budget deficit, I think it's a global situation. There's almost no country in the world, or there are very few, if any, that are not in a deficit when it comes to their budgets. So that we are borrowing is good. The question is, what are we borrowing to fund? Right? What are the expenditure? What's on the expenditure line that we're looking at? And I looked at the budget, the proposed budget, and I see that there is an almost equal distribution between capital expenditure, recurrent, and then debt servicing. Of course, we would prefer that our debt servicing cost will be lower, will be a lower percentage. But I mean, we have history. We know where we're coming from, so we are where we are, and we have to forge ahead. So in terms of the assumptions and the plan to spend, I think it is good. I think if what our goal should be for next year is to actually ensure that our budget implementation is really good, like at least 80%, especially on the capital expenditure part. Because if we get capital expenditure right and we actually build on that over years, we would actually see tremendous growth as a nation.
Right, and definitely I want to also start planning my spending and revenue, personally going into 2024. So what should be the plan here? Personal finance, how do you plan it? In this kind of uncertainty, we're seeing a tough, economy at this time. How do you plan for that?
So one of the things I always try to do at the start of every year or at the end of one year going into another is to actually analyze the budget. One major rule I always stick with is follow the money. The government is usually the major or the highest spender in an economy, such that if the government says that they're going to push a lot of money into defense and security, education, healthcare, infrastructure, then my question to myself is, how can I get a piece of that pie? Because they are spending and it's going to come into somebody's pockets, and it's going to come in somebody's pocket in exchange for some value. So I would either be thinking of what solution am I positioned for that I can plug into this, or what business can I invest in that is already plugged in, so that when they get that payout, I can be a part of it. So that's one smart money move that anyone that is and sometimes you just have to look at the stock market, which companies are positioned to benefit from this government spending. Buy those stocks, their revenue at the end of the year, their profits at the end of the year would make you smile to the bank. It's as simple as that.
And definitely talking about investments, 2022, into 2023, most markets were impacted by geopolitics, inflation, rising rates. What are you seeing, coming into 2024?
So I think this is such a trend, right? It's not anything new. Every year we find that when we think we've figured out these two countries' geopolitical issues or tension, something else erupts that we did not predict at the start of the year. So I do not rule that out from happening this year, next year. So I would sort of brace up for that. And that's when it comes to geopolitical issues. But when it comes to inflation, I do think that 2024, we should actually see inflation either remain flat or begin to taper down. And that's for two reasons. The first thing is that we'll begin to see the impact of the high interest rates that we've experienced so far, because it will slow down spending, it will slow things down. And the next thing is base effects. We've actually experienced hyperinflation in 2023, such that when you're comparing year on year, the base of 2023 is high. So you would actually begin to see inflation numbers either taper down or at least remain within the same range, except if something major, which we cannot see from now, happens to tip it in another direction. Now, on interest rates, I do think that, we see that government spending is a lot. I do think that most central banks would either slow down on raising interest rates or actually begin to reduce interest rates by second half of 2024. And if we're talking about smart money moves, those are the kind of things you should be thinking about and be positioning for if you have cash and if you understand what I'm saying in simple English.
Yeah, if you have cash, that's another issue at this time. There's a cost of living crisis right now. Many platforms will offer great returns to get your money at this time. How do you avoid the money grabs?
The first thing I would say is, as much as possible, go with regulated entities. It sounds boring, but if you go by what I said in terms of find a stock that is positioned to benefit from the government or the government spending, right, you would actually still make very good return. And it will be at a minimal risk or a reasonable risk. When you find people who offer you such high returns in a short period, who you don't know where they are, even if you know where they are, shake them head to toe, they can't produce the money they're requesting from you or they're taking from the collective, right? It's just high risk. You've worked for that money. It almost makes no sense for you in this type of tough economy to take that risk of losing the capital that you have worked for. It is better for you to leave it idle in the bank. Now, bear in mind that a high return is a reward for high risk. High risk in simple English means that there's a higher chance of you losing your capital. If you bear that in mind, it means that high return comes with a higher risk that the money you've worked for is going to disappear. Now, every time you are jumping on those money doubling, 4 times return in 2 months, overnight doubling money type offers, know that there's a chance that the money you work for is about to disappear. A very, very high chance. So I would say be guided. But yes, invest. Find regulated entities, the asset managers especially, and plug in, read their research reports and make investment decisions. Start with those. You will be safer in the long run.
Right. Safety at the end of the day, and hopefully, safety is not too boring, going into 2024. Thank you so much. Great having your perspective, Ola Oladile, founder of the Money Wit Club. Thank you.
Thank you. Bye.
All right, I'm talking about investments now. Let's take a look at what happened yesterday at the local bourse there. We saw it was a green close yesterday, 0.11%. Not a bad way to trade, to end the trade yesterday. 0.11%, that's what we had for local bourse. And we added about 44 billion to the market cap. Not bad, not a bad outing at all. It was bullish and it was good. We saw investor sentiment there. Airtel Africa, they're taking a shine with buy interest from investors there. Volume, we see volumes up about 49.77%, showing good buy interest there. Value was also up 10.424 billion. That was up over 0.5% yesterday to close. But we what lesser deals than what we had before, but still high amount of deals, 6,500. For the sector performance, it was mostly red all through. Those industrial goods there taking a shine. Marginal though, 0.07%. Banking, some of the figures down, like Zenith Bank, pulling that counter to a big drop. Insurance was down big as 0.83%, while oil and gas, that was down 0.14%. Let's take a look at what the top trades now. GTCO topped it there, 67.22 million units of stocks traded, taking a shine for the top trades by volume. See Univ Insurance, 56.75 million. Cornhall PLC also 46.10 million. So it was good trading there for GTCO. NASD also closed in the green, 0.03%. Let's take a look at the fixed income market now. You see for the FMDQ security bonds for the 2032 bonds there, got about 7 deals, 7 for the 2053 and 2032. Total deals there, 16.65 billion. That's what was traded there. Joining me now is Vincent Oshoma, Chief Dealer, Head Capital Market Interstate Securities Limited. Great to have you on the show. Good morning.
Good morning. It's my pleasure.
So bring us up to speed with activities in the fixed income market. You know, at this time, we're seeing a lot of borrowing projections going into 2024, and I'm sure this market will be positioning to absorb some of what the government is going to need to fund the budget going into 2024.
Yeah, the market is positioned to absorb the borrowing needs of the government. And based on the projection, we don't really expect much difference, because when you look at one area that there was a major difference was the fact that there was a reduction in the deficit amount. But like has already been discussed, the projection for revenue is like we can say, it's far out. It's not very realistic based on recent experience, but maybe based on what the government is looking at in terms of their push to increase revenue and also to reorganize our tax system, and also what they are doing in respect to improving oil production. Maybe that's why they have such ambitious targets. But let's see. But we definitely know that though there is a reduction in deficit, if they are not able to meet with the revenue target, definitely the deficit will increase, as we have seen over the years in previous years, whereby there's always an increase in deficit because of government's inability to meet its revenue target. Only you can see that if you look at the revenue the figures for this year, you can see there have been an improvement between the budget and the performance, and that can really be attributed to the fact that, one, there was a removal of subsidy, which freed some funds which were initially used for subsidy, and also the exchange rate devaluation, the unification, which you can say is a devaluation, that also increased the amount, the exchange rate which the government uses for its budget. I think that resulted in improvement in FAC figures and also government revenues. So without can say that's one of the things that pushed the projection, the figures upwards. Normally, the performance is usually below the project target. So I don't really see that anything different from next year. So that means we'll still see a lot of borrowing in the market, and that has an effect of crowding out the private sector, the corporates that are also borrowing. And the market is well positioned to absorb that.
All right, thanks so much. So much to unpack there. Hopefully we don't crowd out the private sector going into 2024. Thank you so much for joining us, Vincent Oshoma, Chief Dealer, Head Capital Market Interstate Securities Limited. Thank you.
Thanks for having me.
All right, now let's head on to other markets. Now we see Bitcoin still trading below the 38,500 resistance, but green is on the screen. This morning, this Friday, 38,000, starting the month of December. Not a bad way to start the month for the crypto market there. Ethereum still above that psychological $2,000 level. BNB, $228. Up about 0.31%. So it's mostly green on the screen this morning. Let's look at the sentiments now. What's the sentiment in the market? It's still greed. It's still a very greedy market. 71 points over 100. Looking at the fear greed index for the market, showing investors are quite bullish at this time. But let's look at the November price action now. Let's see how Bitcoin and Ethereum fared for the month of November. If we look at that slide there, Bitcoin 38,000. This started the month at about 34,000. Okay, you see the November price action. Bitcoin started at $34,472 and finished off November 37,657, up 9.23%. Ethereum started November 1,815, was able to finish at $2,035, 12.12%, outperforming Bitcoin for the month of November. That's Ethereum. So definitely, let's bring in Olumide Adesina now to bring us up to speed. Great to have you, Olumide. Good morning.
Yeah, good morning, Lati. Thanks for having me.
Yeah, so looking at the performance there for November, we see Ethereum outperforming Bitcoin by about 2% or so. How do you see performance in November? Was it good enough for investors?
Yeah, it was actually the best November we've seen since 2020 in the crypto market, and that was pretty much because of a lot of dynamics playing in the market. You know, recall that market pundits are anticipating that ETF sports approval in the crypto market for Bitcoin in the United States is already in the making, and also the fact that the United States Department of Justice settled with Binance, that also removed a major concern in the market. And that's why we're seeing Bitcoin looking at the 40,000 resistance level. Also, Standard Chartered made the forecast that Bitcoin might likely hit the 6-digit number in 2024. And that's pretty much because of Bitcoin halving and also the fact that the weaker dollar is coming to play, Ladi.
Yeah, weaker dollar. And talking about that sprint to $40,000, do you see that happening before the end of the year? And is there a possibility of the so-called Santa rally? Everyone's always looking for the Santa rally.
Yeah, so what we're seeing, if you look at market tacticians, what they're saying right now is that there's a big ceiling around the 40,000 resistance level. And that's pretty much because there are a lot of short positions there. In fact, recent data suggests that if Bitcoin breaks above 40,000, there will be short sellers liquidation of about $1.5 billion. So we're seeing a lot of covering right now. But you know, how long the short sellers will be able to hold is another thing. But I think it's fairly unlikely that Bitcoin might really spring apart above that number. But it might pretty not stay longer because the dollar at some point will recover from those record losses it posted in November.
What are the headwinds are you seeing for Bitcoin going into December now? Do you see profit taking for festivities?
Yeah, it's the recent price action highlights that major Bitcoin holders are not selling. You know, you recall that the latest data from MicroStrategy's recent filing highlighted that they bought huge amount of Bitcoin. So the bias to sell isn't really there, and we're seeing more institutional holdings in that evolving space. So for retail side, yeah, we'll be seeing little profit taking, but generally the market is waiting for a Bitcoin spot ETF approval.
Bitcoin spot ETF approval. We've been looking forward to that for most of 2023. Wondering if it doesn't happen, what happens next?
Wow, if it doesn't happen, then it means that Bitcoin might suffer some dynamic support breakdown. We look first at the $35,000 support, and pretty much it goes back to 25. Because these are three things why the Bitcoin spot ETF plays with me. It shows positivity around the regulatory space that Bitcoin will be an evolving asset and a traditional mainstream support, and also institutional investors can have indirect exposure to that market, and it gives Bitcoin some form of credibility. A misapproval or a much delay will definitely weigh down such positive optimism around the Bitcoin market.
All right, first trading day of December. It's not starting off so badly. We'll see how it plays out through the month. Thank you so much, Olumide Additional, financial market analyst. Thank you.
Thank you for having me, Ladi.
All right, we'll look at the top gainers now for 8 a.m. This morning. Let's look at the top gainers, see who's topping the counter. Celestia, one of the new kids on the block again, $6.96, 14.75%. The only double-digit gain on the top 100 coins we track on CoinMarketCap. Render token is also on that list, $3.53, up 6.77%. We see dots there, $5.47. Let's look at the top losers at 8 a.m. this morning. DYDX there, $3.11. That's down 2.42%. So we're seeing marginal losses this morning. KuCoin shares as a native coin for KuCoin Exchange. That's $8.03, down 1.47%. So we're seeing really lean losses this morning. Still a very bullish market. Sentiment is still greed. And that's how the market is starting off December. Most of the markets we track, and definitely we're tracking how the NGX opens for the first trading day of December. Thank you so much for watching. That's the show today. I'll catch you again at 1:30 p.m. on Business Incorporated for more updates and developments in the world of business. Also, you can visit www.channelcv.com. I'm Ladi Williams from me and the team right here in Lagos, Nigeria. Bye for now. Happy New Month.